Good afternoon and welcome to Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. Kelvin Wong, market strategist at CMC Markets, is our guest today. Kelvin, good afternoon and welcome to the show.
Hi, good afternoon to you, Brian, and good to see you again.
Now, Kelvin, I'm going to come back to you in a little bit, but for a start, we're going to take a look at crypto markets. Bitcoin is at 23,384.9. It's up 6.8%. Ethereum is at 1,563.16. It's up 2.86%. Now, looking across to regional markets, we start with the SGX, which is up 1.33%. Bursa Malaysia, which is up 0.54%. Shanghai, which is up 0.66%. ASX All Ordinaries is up sharply, 1.74%. The Nikkei is up sharply as well, 2.48%. The Hang Seng is up 1.64%. And rounding up the numbers, we've got the Kospi, which is up 0.7%. Now, Kelvin, it's a sea of green, and some markets are significantly up. What is the reason for that?
So if you look at the current situation right now, especially across the Asian stock market, so all of them are in positive footing. So two factors actually driving this across the board rally. Firstly is due to this strong momentum follow through in all the major US stock indices, especially the Nasdaq 100, which is much more higher beta. And one of the reasons over here is because the S&P 500 and the Nasdaq 100 broke above their 50-day moving average. So it's the first time since April this year. So it gives a bit of what I call assurance to short-term traders that, hey, right now we may start to see a bit of navigation away from this major bearish downtrend that is in place since the start of this year. And for Nasdaq 100 will be in November last year, that we will now transiting into a potential corrective rebound phase. So this is one of the reasons that actually spilling over to the Asia markets. Second reason over here is you start to see this kind of a dollar pullback story, the narrative since the start of this week. So dollar has started to cut strength, has started to do a bit of mean reversion to the downside since the start of Monday. And it actually accelerated yesterday where they actually talks about ECB with the possibility of raising more than expected, which is markets is expecting 25 basis points for tomorrow. But now there's some market talk by media stating that based on some sources that's been reported that there could be a possibility of 50 basis point tomorrow. Yeah.
Now, given that scenario, then how is that going to impact this overall currency story because of the differentials in interest rates?
Yes. So let me talk about this story about, because currency, right, there's this currency war narrative. So what is a currency war narrative? Briefly for the sake of the audience. So before I touch into the charts, the technical chart of the dollar index, let's talk about this currency war first. So currency war, right, is actually where all countries are trying to actually depreciate their currency against the dollar, hoping to get a head start in terms of export growth, especially for countries that are pretty much dependent on export. What we could see is in the Asian region, Singapore could be probably one of them. Then you have China and you have Korea. So, but on the other hand, over here, what you're seeing right now in this particular scenario where we start to see elevated, heightened inflation across the globe. And this one will actually start to lead rise to this one called reverse currency war. So what is reverse currency war? So reverse currency war right now is most countries will actually try their best to actually appreciate their domestic currency value against the dollar. Why? Because it's to actually curb imported inflation, which is going to be a problem since the start of this year. And it starts to actually be more pronounced, especially in Q2, where we start to see, we call it supply side issues start to come out, being driven by the Russia and Ukraine conflict. So right now, if you start to see most developed nation central bank, with the exception of China and Japan, has started to actually up their game in terms of their monetary tightening policy. That means, i.e., we're no longer talking about QE, we're now doing QT, quantitative tightening. That means reversing what I call their bond buying strategy to keep interest rate low. But right now, we are going to start a interest rate hike cycle, and we got to be on the same path as aggressive as the Fed to maintain this interest rate differential against the US dollar. So hoping
Correct,
that
because basically this is the problem that a lot of Asian economies are having right now. the fact that they are laggards in terms of the rate hikes against the US Fed. And
Precisely.
obviously, the fear is that their currencies will then, I mean, you'll see capital flight out of their currencies and their economies.
Yes, precisely. So right now we got to actually right now over here is that we need to have a balance between these two, because we definitely don't want to have a capital flight out of it. But for sure, right now with this reverse currency war narratives start to gain traction since late last week, and especially right now we start to see one of the laggards, which is the developed nation bank, which is ECB, started to be more aggressive in their interest rate hike. Bear in mind, their deposit rate is still negative, still negative at 50%. So even though if you do 25 basis point hike for tomorrow, it's still negative 25. But right now, if they do 50 basis point hike, actually they tell the market, oh yes, hey, we are now getting back to normalcy pretty soon. And that could actually explain right now to talk about the technicals of this dollar index chart, like I shared with you all. So this is a monthly chart, so it's a very long-term picture chart of the dollar index. So this dollar index comprises of the major currency. So the biggest weightage, close to 55% or 57%, they're about heavily weighted to the euro currency. So the euro movement actually plays a big part in this dollar index. So we could see, right, this dollar index has been trading in a major circular uptrend since March 2008. So that was actually the great financial crisis low. And especially since January 2021, we're talking about a year ago. Yeah, about a year ago, it has been in this very steep uptrend. And this steep uptrend is kind of overstretched, hitting a key resistance level at already hit 109.30, which is recently last week it printed a high of 109.29, right exactly at this resistance level of 109.30. And with the RSI, money RSI coming very close to an extreme overbought level. So we could see that this strong rally is pretty similar to the rally that was seen from May 2014 to January 2017. Then thereafter, it started to do a bit of consolidation. So potentially, right, if history repeats itself based on the technical analysis chart, we could start to see a bit of consolidation right below this 109.30 level, right? Given that technicals are kind of overbought, pointing to a bit of exhaustion in this steep uptrend. So we'll be watching this 103.20 trigger level. So if we have a kind of a weekly close below 103.20, we could start to see this 1 to 3 months of pullback towards 99.25 in the first step. So that actually tell us that, hey, this dollar strength that we see since the start of this year or last year, so this year being more pronounced due to a hawkish Fed policy, will start to do a bit of mean reversion to the downside, which is i.e.
Okay.
it could potentially translate to what I call at least a relief rebound in global equities, given that the dollar strength and equity actually move in a different opposite direction. Yeah.
Now, Kelvin, as always, thank you very much for your insights and thank you for coming on the show.
My pleasure, Brian.
Now, we've been speaking to Kelvin Wong, market strategist at CMC Markets, on Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. I'm Brian Fernandez. This video and podcast will be on our various platforms as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks again for tuning in.